What's up, everybody? Welcome to the weekly close live stream. It is Friday. I am Norok, aka Wes, and I do this every Friday. Discord, TradingView, and YouTube. The topic high point of today is going to be Bitcoin and the bullish narrative surrounding it. I've never heard a Bitcoin bull case that hodlers didn't like, share, subscribe, and retweet. And one of the most common ones is that the halvening, in other words, the half rewards that miners are going to receive is coming, and in times past it has led to a bull run. Thus, it is about to happen. The moon is about to happen, the big fundamental event. But I really want to dig into that and talk about whether or not we can really assume that is true. That's going to be the high point for today. Of course, we're going to start with the market update because I look at a lot more things other than crypto. And then, as always, if you guys have symbols or questions, post them in the chat. One of the reasons I do this and keep a community on Discord is not to make money from people. It's to, well, it is in the sense of sharing ideas for trade ideas. You know, there's a lot of picks. There's a lot of setups that I can't look at myself that people will come in this live stream. One of my favorites is the breakout trader Casey. He usually comes in every week and shares his breakouts that he's doing. But also, we were looking at Netflix last week, and we're going to talk about that, get a little update on that trade because that was a good short that we started. Well, we'll see if it's good or not. So stay tuned, and as always, if you have questions, put them in the chat. Let's go back to my dark screen because it's better on the eyes. All right, so let's just take a quick look over stocks first, and then we'll get into crypto. So the topic that we've been talking about for the last few weeks has been, is this the anatomy of a bubble on the stock market? In other words, if we look at the quintessential, let me bring it up. The quintessential chart of the anatomy of a bubble, the key point being that we had a big bull run in the stock market. Let's zoom it out to the monthly chart of the stock market. Yeah, see, that looks more bubblicious right there. And basically, bubble goes up, and then we have this bull trap, which people think that all the way till October 2022 was the bull trap. And now we're in this return to normal that is going to ultimately fail. Well, I think that some people just try to be contrarian oftentimes for the sake of being contrarian. Sometimes I'm guilty of that. But in the stock market's history, yes, it has had crazy events, but you need to just go ahead and assume that people are going to want to buy goods and services, and these represent companies that do just that. Now, if it's all propped up by inflation, that's something that you can get into offline. But the criteria that I'm looking at for the stock market is very simple. Are we going to survive the 50% retracements that will get us up to retest the all-time high that we set in the very beginning of 2022? And so far, even though there's been ample bearish news, in spite of it, the market continues to trend higher. It survived a major test. Basically, it did a nice turn on Friday, August the 18th, which I was watching very closely. That was the retracement from the trend starting in May up until the high there. And so as long as that held, as long as we didn't break Friday, August the 18th, I'm remaining bullish. And so far now, we've survived yet another 50% retracement from this recent trend off of that. Why do I use 50% retracements? Well, that's the same reason that I was showing you guys Bitcoin in the opening sequence, because it's just how powerful technical indicators can be. Not throwing a bunch of crap on your charts, a million different indicators that change the bars into, color-coded gobbledygook, but just very simple looking at 50% retracement levels. Bitcoin itself has maintained a very steady, consistent hold of 50% retracements. 1 second. This is my indicator, by the way. You can search for it on TradingView retracement levels. It is free. I do not charge for it. Now let's clean this up. So from the beginning of the year, from the low that it set after the FTX FUD in November up until the high that it set in February, we had that banking FUD, which created a buying opportunity because any bearish market shock is going to have a great effect on Bitcoin. Heresy, I know, but one needs only to look at what happened in COVID to understand that that is absolutely true. So when everyone was afraid that the US dollar was going to fail and things like that, well, Bitcoin took a hit as well, creating a buying opportunity. That's important. That's something that we're going to talk about later. And so from that 50% retracement, there had another one from that leg to this, from the low in March to the high. That's where it held in June. Now, everyone loves this when we're talking about bullish cases of Bitcoin, but the reason I'm short is because from the March 22 high down to that low, that big bear trend that basically took us out of it's going to be okay, man, 30 to 40K range down to, oh crap, this is a crypto winter. That 50% retracement was hit at the top of all this ETF. What's the opposite of FUD? Excitement, which, by the way, an ETF being launched is not necessarily bullish for Bitcoin. I do not believe. But that hit that just perfectly there. And so now, once again, what is price doing? It is holding another, well, basically the same one that it got to back in June. Can't say perfectly because nothing's perfect, but we haven't closed below it. It has been holding it as a floor. Why does this happen? I don't care. It just does. It just works. Better than any indicator I've ever found in my decade plus of studying price action. And so if we go back to here, that is why it's very important to watch this stair step as it goes along. And when a 50% level is breached, which I define as a close, basically two closes, closing bars above or below what that level may be, that's when you start looking into the trend to change. It's just a very simple rule that I use. And if that were to happen, I would come on here to the live stream and tell you, okay, now we have our signs that this bearishness is going to actually take place, which most people are, I'm not even going to say people fear it. I think a lot of people hope. A lot of people hope that the economy will crash, which will bring stocks and houses down to cheap levels, whatever that may mean. And then they ought just to presume that because they are of the same super smart mind that they are right now to predict it, that they will be of the emotional fortitude to actually buy it at these cheap prices when no one else is. Let me give you a little insight into me, you, everyone else. When prices are very low on something, it's because no one wants to buy it. Guess who's included in no one? You, me. I'm just as scared to take a trade when something's going down or short it when it's going up as anyone else. That's human psychology. That's what makes trading so hard. I've never had a trade, I've never had an investment that didn't make me feel a little uncomfortable. And one of the things that I see happening in the Bitcoin space, if you go to Twitter or any social media, is there's a lot of echo chambering. I'll use that phrase. I won't get too crass about what I really think it is. Going around in a circle, shaking, like a barista would shake a martini. And every time you see someone post something bullish, people will come into the retweets or the comments and they will, just amplify it up like, oh, all these people are going to be sorry if they get out now before the halvening. The halvening is just a foregone conclusion that this is going to pump it up. And I can't believe people would be getting out now, even though the technical and people say that it's time to short. Well, let's really dig into that a little bit. Let's dig into that presumption. Now, who am I? if you're just joining me, if you're just this your first time here, I am just a trader, a professional trader. This is what I do. I'm not a social media personality. That's not what I set out to do. So I don't go and publish these things for the purpose of mass consumption. Because if I wanted a big following, I would just talk about the stock market going to crash, real estate going to crash, and Bitcoin going to moon. Those, if you start talking about those things, you will be a social media success virtually overnight, or at least you'll get some modicum of success. But I have been talking about the halving cycle for quite a while, going all the way back to 2016 after the first time it did, on this little bitty platform called TradingView that no one really heard about, but I got into it because otherwise you had to download OHLC data of Bitcoin and process it through Sierra charts. That was annoying. So TradingView is awesome, 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 awesome. I love it. Love the platform and love the opportunity they've given me to live stream on it as well. And so I've studied these events in detail just as much as anyone else has. And it's not that I'm going to poo-poo the thesis. Well, actually I am. But I tried to come to some semblance of predictive modeling back in the early halving cycles, back when it was a new thesis to base a Bitcoin bull case on. And so I'm not ignorant of it at all. You know, it culminates basically in this model, which I've talked about at length in other videos, going back through the history of, you know, actually putting stuff online, which is the Bitcoin stock to flow model. The whole idea is that supply, demand, and price, just basic economics, economics 101, applied to Bitcoin to create a bullish case. You know, it's not dumb to think that there's a limited supply of something, and as long as there's demand for it, the price will go up. In fact, I'm sure it leaves a lot of people wondering why Bitcoin would ever go down since there is a limited supply. It doesn't stand to reason that if something has a limited supply, and I've lost Bitcoin in hard drive crashes, you know, so there's actually lessening supply, not just people holding it out of the market, but Bitcoin being either destroyed or lost. Why would the price be going down? Especially when you go and read on Twitter how bullish everyone is and how everyone's holding. And so where does it go? I don't have an answer to that question, but we can look at the price and we can make some assumptions based on that. That's what I base all of my thesis on. But for those that want to have a reason, want to have some kind of a fundamental reason for trading it, not trading it, investing in it and holding on to it, they look for things like this. And so one of the things that has been happening in recent times, because the halving, let's see, what is that estimated date? Estimated halving Bitcoin. Supposed to be in April 2024. So it's coming up. What is that? About 7 months from now. That is when people are assuming that the Bitcoin block reward, in other words, the reward every time a miner solves a block, is going to be 3.125 Bitcoin down from 6.25, which it is right now. There will be less Bitcoin being generated, thus less supply, thus price should go up. And that has stood true. You know, I was prompted to go into this topic because there was a post someone shared to my Discord, which got me to discussing my ideas on this, because I've talked to a lot of people in real life, because a lot of my friends are people I've known for the decade prior that have been in the crypto space. And so there's a big number asset manager predicting the rise post-halving. And people love this kind of stuff because, you know, people don't have billions of dollars of Bitcoin like they would want to, but they have a little bit. They have a little bit. They have a few $1,000s that they want to be a few million so that they can retire. I get it. I mean, who doesn't? But is it going to actually happen with any guarantee? I think people can assume it, but what I really want to dig into on this is there's a couple of major flaws in this reasoning. Now, let me check on the comments right here, see what people... Happy Friday to you guys. K3399. Thank you for joining TradingView. Doing good. Yeah, get your questions into the chat, and we'll address them once I get through in my ramblings. So, by looking at Bitcoin, let's just kind of put my thoughts into a little bullet list right here. And I may do an independent edited video on this in the future, as my manager keeps on recommending that I do, because even though it's not going to get very popularized, because it's not telling people what they want to hear, which is we're all going to be okay. What does that mean? We're all going to make it, man. You can make it. It's just you can't make it on the things of yesteryear as well as you can new opportunities. And I'll put it that way. I'm not going to sit here and tell you that Bitcoin is done by any means, because that's been said many times before. But the greatest risk reward may not be in doing what everyone says to do. So the first problem with this is in statistics, specifically the central limit theorem. What does that mean? Basically, in order for something to hold true, the central limit theorem to hold true, you need an increase, or you need an elevated number of n instances. Let me actually just paste this thing in for my notes. So what we need, if you take statistics in college, they'll tell you that for you to have any kind of statistical significance, you need to have a sample size of at least 30 or greater. In the case of the halving, there have only been 3. So it does not qualify for statistical significance. And even when we bring up this stock to flow model, which people try to, where's my link here? When people try to, I lost it. Stock to flow. Well, there it is. This is why people make edited videos. What they try to do is they try to draw this line, this uptrending line based upon supply, how essentially the halving happens, supply being generated goes down, and you get a big bullish rise in the first quarter of there, and then it kind of levels off, and then right before the halving, there's a bullish move. But I mean, if we look at this and we use our pattern seeking to try to make sense of it, yeah, we can kind of see it, but it doesn't take as long to find anomalies. Like how far it actually goes above the model, which is good because we're all bullish. And if things go above the model, or that deviation is golden. Don't worry about that. But now we've kind of gone into this area here where it's below where we should think it might be based on this model. There was a Bitcoin rainbow chart, which is another variant of this, which, by the way, if you see, is V2, because they had to go back and change it, because V1, this is again based on halving cycles, and they draw these nice little colored bands in here. And Bitcoin V1 got broken, so what they did was they redrew it, because that's what you do when a model fails. So originally it started going into this zone of Bitcoin is dead, lol. And so they redrew the model. And one thing they forgot to account for, like I said, was this extreme variation above the model right up there. And so now it's been accounted for, and now it is back inside that range. How convenient is that? So we'll see if this holds up as well. But people have been trying to apply these statistical models to add some legitimacy to these bull cases, but they're not statistical in any way, shape, or form. And so we need to kind of discount them as a guarantee based on that just because something has happened 3 times before, it will automatically happen again. In fact, as a contrarian trader, if somebody tells me that something has happened with 100% certainty in a few times before, I'm going to automatically assume that the next case is going to be a good trade in the opposite direction, because everyone's betting on it happening. So number 2, correlation versus causation. Bitcoin has been going up forever, since it was born. Thus, can we really say that any event in its history is causal? No. It is more today by thousands of percent than it was 5 years ago, 10 years ago. And so anything that's happening there is more just it happened rather than it could be causal, but we can't really assume that because it's just been going up because more people have become interested. There is a limited supply, and money has been printed. Money printer has gone burr, but when money printer got turned down on burr, the party kind of stopped. That's kind of important for the world that we're living in right now. And finally, when people ask me, hey, I like reading books. I'm not a Zoomer or a young millennial. I still read books. I tell them you should probably try to read Trading in the Zone by Mark Douglas. And if you don't have an attention span for it, which I don't, I'm admitting, and no Zoomer does, the TLDR is anything can happen. And so I see a lot of these bull cases based upon the halving cycle being a guarantee. Well, it's happened before, thus it's going to happen again. Thus, hold your Bitcoin, buy more Bitcoin. We're all going to make it, man. You have, and people that are just getting into trading, people who haven't bet exorbitant amounts of money on a surefire thing only to have it blow up in their face, do not have this lesson internalized. And so the whole point of this book, and I'm telling you right now, is to internalize anything can happen. You need to look at, well, what if everyone is wrong? Because generally, if you do this long enough and you read enough social media, if you look at enough CNBC, if you follow enough discourse, if you live through 2021 and 2022, you'll see that when everyone thinks something is great, that's not the time to be buying. It feels good. It feels good to have everyone telling you that you're doing the right thing. And that's why you see all this going on social media. And that's why people don't really want to hear someone like me doubting it or casting a little bit of shade on it, because it doesn't feel as good. Because it feels really good to say, okay, I have this amount I have this number on the screen that's this size of money, and there's things I want to buy that are bigger than this number. And so people tell me that this number is going to turn into that if I just do nothing. I like that. I like that. Now tell me that. Give me more of this. I want to wake up in the morning, pull out my phone, and have people tell me good things. Tell me things that I really want to hear. But they might not be true. So what do I actually think is going to happen? What is my speculation? I am a speculator. I'll tell you. And then this comes from the discussion I had on Discord, which had me put my thoughts not to paper but to screen. I think that based upon all my experience in Bitcoin, what I've come to internalize myself is this, which is very contrary to what a lot of people think. A lot of people that, try to get you to buy Bitcoin, they already have some Bitcoin and they want you to buy it so that the supply gets more limited, so the price goes up and their bags are lifted. And to be fair, if you didn't have people like me becoming any kind of a voice, telling people not to do that, then yes, that would be true. It would happen to be a tautology. If no one sold Bitcoin, if everyone hodled it, then it would continue to go up. But unfortunately, miners have to sell it to pay for their energy costs, which are not going down, and the difficulty is actually going up. That's one possible reason why you just don't see the bullishness in Bitcoin people are expecting right now. I think what I've internalized, especially following the event where everyone told me, everyone said, I remember this very specifically. You won't see this on Twitter anymore, but I have a unfortunately good memory. When Bitcoin came down to this right here in June of 2022, what they said was Bitcoin has never gone lower than its past all-time high, which was true, given that you had this instance back in 2013, and we need to go back further to the index on TradingView, and then of course the 2011 all-time high. This was the one that I got my education in Bitcoin in. I bought my first Bitcoin for $20 and saw it go all the way down to 190. Yikes. It was dumb of me to put good hard-earned cash into magic internet money, eh? And so that was true for all of 3 instances. You know, Bitcoin never, well, actually, it wasn't really true there, was it? Well, that didn't count, did it? This one, the 2013, that was the real one. Okay, we'll count that. Yeah, see, it's funny when people are trying to make some kind of case statistically, and they throw out the ones they don't want because they don't suit the narrative. And then, of course, this one right here. So in 2 cases, not 2 out of 3, but just 2 cases before, Bitcoin had never gone below the past all-time high. And so there we sat in June of 2022, and given a little bit of time, well, FTX pushed us down there. That damn Sam Bankman-Fried. It wasn't our poor investment decisions. It was him. It was him and all his Democrat cronies that he donated to. SBF. Of course, we recovered from that. Good for that. But I remember distinctly people sharing that idea, that meme, to make people feel good about hodling. It's very important. It's very important for people to feel good about hodling. So what I've internalized is this. I will always be able to buy Bitcoin cheaper, and I will always be able to sell Bitcoin more expensive than today. Now, that's anathema to what a lot of people think, but I really believe that's true. And I think that's going to be true for the next several years. One thing I also believe is true, which has happened in many instances before, the few instances that we've had with economic events, because we really haven't had a bad economic event since COVID, and we haven't had a super bad economic event since 2008. So Bitcoin has not really lived through a major depression, recession. It really hasn't. COVID, it was, but it's not 2008 multi-year recession. Bitcoin was invented after that, after interest rates were lowered and cheap money was coming back into the system. That's another thing we need to take into account when we think about where does Bitcoin stand fundamentally. But in the case of the banking FUD, the little small FUD we had in March, which was a great buying opportunity for literally everything this year, and if you missed it, I'm sorry. But now we're going into the last phase of the year, and things are going to get a little dicey and bullish, because they do in the last quarter, but not till you get to October. So that little FUD definitely affected Bitcoin. And then, of course, you had the FUD of March of 2020, which looks small when we do that, but we need to understand that there were a lot of people that, even though we had a big bull run through 2019, coming off of the 2017, basically, let me give you a little insight of what people were thinking back then. At that point, there had been the 2017 run, which topped out with the CBOE announcing that they were going to launch Bitcoin futures. Basically, they were going to make Bitcoin mainstream with futures. Does that sound familiar to launching an ETF and how it pumped up the price until it finally happened? And then once that was done, there was nothing left to pump it anymore. Remember that. And then there was this period of time where Bitcoin stagnated and people assumed, oh, well, okay, this is it. You know, Bitcoin, this is as low as it's going to go. It's found a floor. It can't go any lower. It's good. Buy it, hold it. You're fine. And then it dropped another 50%. And then, of course, you had a major rise in price off of the lows that it found in 2019. Which many presumed was, okay, now this is it. Now this is the big bull run we've been promised. Now we can ambitiously look for 100K Bitcoin. So if you buy it now at 8,000, if you buy it now at 10,000, if you buy it now at 12,000, you're going to be great, man. You're going to be good. You're going to be great. Just do it. Just hodl. Just post about it. Meme it. And then we had that little annoying virus, which I think has been affecting me the last couple of weeks, at least a variant of it, that happened in COVID, which brought us all the way back down to levels that people did not presume it could go to. So what we need to assume going forward is that Bitcoin is going to respond to negative events, and that's the buying opportunity you want to look for. I don't know what else to say. I don't know how else to put it, except there's ample evidence that Bitcoin as a risk asset, which is what it is, Despite what people want to tell you about a Bitcoin monetary system, there's a lot of contradictions that I'm not going to go into here. But if you're looking for a buying opportunity of Bitcoin, it's going to be a major economic calamity. It just is. And at that point, Bitcoin will basically, you can presume, drop about 50% from wherever it is. If it happened today, that would put Bitcoin at about 13,000. If Bitcoin goes up to its all-time high at 60,000, it'll come down to 30,000. Just in these kind of, the sell-offs that are buying opportunities are 50% sell-offs. Now, a lot of people don't want to worry about that. A lot of people don't want to think about that. They just want to DC and hold. And okay, you can do that. But right now, as we come into the present and as we go into the future, Bitcoin is not responding positively to news. We had this news of this 5% pump here in the end of August, was not sustained. So going into the future, let me bring it back up. I think that Bitcoin is going to be cheaper than 25K and more expensive than 25K for years to come. At some point in the future, there's going to be a financial crash. I don't know when it's going to be, and it's not going to come from any of the avenues that people are currently presuming. It's not going to come from inflation. It's not going to come from Russia. It's not going to come from BRICS. It's not going to come from oil. It's not going to come from real estate. It's not going to come from all these ideas that are in YouTube thumbnails with big, bold yellow letters. That is not where the crash is going to come from. It's going to come from where no one is looking, because that's what makes a crash bad. The ways that people are thinking about crashes are going to come to, they're hedging against it. They won't be shocked. They'll handle it less emotionally because they were already thinking about it. They already had a plan for it. It's not going to be that bad, but it definitely sells clicks and views because people are aware of it and it causes fear. But there's going to be, in the future of humanity, another economic collapse, another economic bear. It is just what happens, and it's going to come from where no one expects. So worrying about it now, watching videos on how this is going to happen and why, and the charts to show it, is just going to feed that need for fear corn. And actually, there's a Twitter thread I want to look at here in just a minute. Once we check comments and things like that, they'll kind of illustrate that I think is kind of interesting. But when that happens, if you keep your head about you and you really still believe in Bitcoin, that is the opportunity. So hodl your cash, your US dollars. Very unpopular opinion in the crypto space, but you can get about 5% plus on your savings account right now. And unfortunately, that's the decision that a lot of people are making. Now, people will tell you that's dumb, inflation, it hasn't gone away, the Fed's lost control. Okay, cool story. Just act rationally. You can get 5+% on a savings account now. In the meantime, you need to wait for a major economic event, and then you'll have that cash to buy the things that people want. Because despite BRICS forming, the dollar is not going to go away. Again, like I say, it's the mainstream opinion that I'm sharing, but I come from the crypto space. So I've gone through the ringer of the crypto arguments and come out on the other side, the contrarian to the crypto argument, which I don't think makes me mainstream, but we'll call myself a contra-contrarian. Because people have gotten so locked into this Bitcoin narrative that I don't think they can see the reality of actual past events that have led to this point to make objective decisions. So that's my spiel on Bitcoin right now. It's not what people want to hear, but it's what I think is true, and what I think is the most helpful for people to make decisions going forward. So let's go to some of the comments and stuff like there. The narrative may be, I guess, an increase in central banks' liquidity, not the halving. Good that you brought that up, because I want to talk about a Twitter thread where someone talked about liquidity related to the markets. I'm going to share that here in just a second. Could AI be the crash starter in a way? Well, Skynet came online. What year was it? What year did Skynet come online? Jen, can you look that up for me? It was a few years ago that Skynet came online. So it's already self-aware. And so that we could already be living in an AI-controlled world, according to that timeline. We'll go through Casey stuff. And hey, what's up, Casey? Yeah. Oh, wow. That long ago. Skynet came online August the 29th, 1997. It began to learn rapidly and eventually become self-aware at 2:14 a.m. on August the 29th, 1997. So we've been living under AI for about 26 years right now. So, yeah. Is AI going to cause the crash? Well, technically they already are. Nah, here's the thing, man. Here's the thing. The people that are pulling the strings or trying to, like the Fed, they're trying to do the best they can. I don't buy into this whole argument that people wake up in the morning and decide to be evil. Like when I worked in IT, I started as a lowly, my computer won't load, restart it kind of support technician, and worked my way up to manager. And I had guys working for me. And once I became a manager, I came in every day and I decided, you know what, I'm going to do my job for the people that, want me to do what I do. And I'm going to make sure that my guys have the best day they can so they can get the job done, so that I look good, so that I can go home and know that I did a good job. I didn't wake up in the morning and decide to be an asshole. Like a lot of people say, like, whoa, why are you down, man? Well, my boss was an asshole to me today. Why was he an asshole to you? He just is. I doubt that. Once you get into the workforce and you kind of move up to middle management, you don't really buy that. And the same applies to people that work at, these institutions. They've gone to school for a very long time. Now, we can debate if economics is a useful field. I mean, it's not for how much efficacy it has, but they're trying to keep the economy going, everyone employed, and everyone's, wealth building. That's what they're trying to do. Do they succeed all the time? No. Do we succeed at everything we do? No. But they're trying. And again, unpopular opinion, they're kind of succeeding because we are not in a recession. We're not, by the way, just in case you're reading that we are, and it's a shadow recession that nobody knows about. Yes, prices are high, wages are low, but you can still go and find things. We're not in the shortages post-COVID, and people are not massively unemployed like they were after 2008 with their houses completely underwater. Yes, people can't buy houses now, but that's just something that's going to have to flush out for a whole different reason. That's a whole video that we could talk about. So Bitcoin is going to 11K. Where I don't want to put a price on it, but I will. What I have assumed since the high and throughout here, what I was telling people was Bitcoin is going to crash anywhere from 75 to 95% from its all-time high. Why? Well, for the exact opposite reason I told you earlier about that happening, because it's happened before. Just because something has happened before, doesn't mean it'll happen again, but it does give us an idea. Based on that idea of what Bitcoin has crashed, you needed to assume that Bitcoin could crash 75% to 95% of its all-time high, which nobody wanted to hear when we're sitting at 40K Bitcoin. But the least amount that you needed to, as a risk manager, assume was that Bitcoin was going to fall 75%, which was 17K. And of course, the highest that you would want to assume, which was 95, would have taken you down to about 3K. Is that what I'm saying? No. Would that liquidate Michael Saylor and create the biggest dumping of Bitcoin on the market and greatest buying opportunity in history? Yes. But I would say somewhere in the middle is the next level, and so that is about 10K, 10 or 11K. When it's going to get there, I don't know. But what I am assuming now, based on the price action from the trade that I've had up on my screen for the last couple of weeks, is that if we assume, let's just start over with my 50% lessons. If we presume that in the event of a trend, which I define as from the low to the high, this of course being the trend in the early part of the year, We're going to assume it's going to pull back to the 50%. The first thing that we want to look for is we want to try to retest that high. That's what we want to try. And then, of course, as it did its next leg, it did the same thing where it pulled back to its 50%. And we look for that retracement to complete with a pullback to its high, which it did. And we love it when it's in a bull case. But if we flip our heads over and we look at the pattern and we look at the trade from the opposite side, if we're measuring now the broader trend, the bearish trend, which has in fact hit and held its 50%, then as a trader, we presume that it is also over an extended period of time, as it took to get here, going to try to retest the low. That's what we presume. When are we wrong? We're wrong when it breaks up here. Then everyone can give themselves a pat on the back for holding through this hard times. But as it stands now, Bitcoin is bearish and it's trying to retest its low. Very simple. Very simple. All right. Let's see. I would not just laugh, Richard. I have been predicting it. And for the same reason you say that, because it would be a delicious irony, and more so for me, philosophically, I think it's deserved, because I think it was very fiscally irresponsible for him to be telling people in February of 2021, when Bitcoin was about 55K, after he had spent almost $2 billion on borrowed money to buy Bitcoin, for people to mortgage their houses and mortgage their business. Look back on podcasts. You can find, I mean, that's the thing. He did this whole podcast circuit, and everyone would love to share it because it was, like I said, if you want to be a social media personality, if you want to get big in that space, just talk about how bullish Bitcoin is and how it's going to go to the moon. Everybody's going to be rich. That was what he was selling to people, talking about his bag, his investment, his book, trying to get people to mortgage their houses to make him richer. And it's all on borrowed money. And things start to get real for this borrowing of money in 2025, about June of 2025. That's when a lot of his debt begins to mature. And a lot of this debt was taken out at very low interest rates. He used different financial engineerings, different kinds of loans, some of them fixed rates, some of them adjustable rates, some of them convertible to stock. Bitcoin hodlers love him because they think he's sticking it to the traditional financial system to buy as much Bitcoin as he can. Ha ha! He's really showing them. But what he's done is he's tied Bitcoin to the interest rate cycle. He's one of the worst offenders of the Bitcoin ethos. And for him to get liquidated would be, in my opinion, justice. And so maybe I'll be wrong for that reason, that I'm too idealistic, but I just see a documentary in the future chronicling his 2013 tweet saying that Bitcoin is bogus, blah, blah, blah. He was a hater back in the old days, to becoming a Bitcoin evangelist, to borrowing tons of money to buy it. And then when things did not play out, because he basically structured his debt to go out to 2025. He was smart enough to give Bitcoin essentially from 2021 to 2025 before he really needed to service this debt with cash, by the way, that his company MicroStrategy, doing business intelligence, doesn't actually make. They lose money on their core business depending on the quarter. So it doesn't really have, and he definitely doesn't have enough to service billions of dollars of debt. It's just that he's structured in such a way that it doesn't get really bad for service, and he doesn't have to pay his interest off for another couple of years. He assumed that Bitcoin bear cycles can last 2 to 3 years. So he gave himself like an extra year. He gave himself a fourth year from 2021 to 2025 before, just in case this happens, just wasn't going to happen. Bitcoin was going to keep on going. Let me see if I've still got it on here. I charted this out. Yeah, so this is basically this is their stock, but you know he borrowed and bought about $650 worth of Bitcoin in December 2020, and then in February of 2021, when he really started going on his podcast circuit, he put in $1 billion. And then when it dipped, he bought the dip with another $400 million. And there's been other in here, but you know, since I made this, basically, how does this, you know, buying on the run up, being like yes, and doubling down at the high, and then buying the dip? And I think I really hold on. Let me compare this with Bitcoin itself. It's not a daily. That's weekly. How much does this? Let's see. Let me bring this up. So yeah, so he bought $650 million of Bitcoin on the run up. I should have done this top to bottom. Actually, let me do that. There we go. Okay. 1 second. Let me get this straight. There we go. So he bought Bitcoin here. That's right, coinciding with the real rise in price up here. Right when it broke the all-time high. You know, when he broke the all-time high, he was like, okay, we're going. That's a good trade. That's a Casey trade. That's what Casey would do, make a lot of money. Casey, who's posting in the TradingView chat right now, some of his breakouts. We'll get to it in just a second. Yeah, and that's why I think he deserves it. He ruined a lot of people. I mean, people should have known better, but man, he told people what they wanted to hear. And then, of course, when it came up to a major high, what did he do? He doubled down, you know, as things were going up. He didn't buy less, he bought more. And then he kind of floundered. But, you know, he bought the dip. He bought the dip like people would when it pulled down to June. And then I'm sure there's other buys much, much smaller, but these were the big buys. And so it comes up and, you know, of course, it failed to close above the past all-time high. That's a big bearish sign. And then it failed to close above that again. This was where you needed to get out. That's what I tried to get people to do because it was not following through. Key price action, but nobody wanted to hear that then because that was too uncomfortable. And so how much does this look like a really bad trader? You started with a good trade, you doubled down at the wrong time, and you couldn't let it go, so you basically bought what you thought was a dip, and now you're sitting at a pretty big loss. And of course, the MicroStrategy stock is going to be tied exactly to Bitcoin, you know, correlated, well, not exactly, but highly correlated to Bitcoin. And a lot of people see MicroStrategy, MSTR, as a way to put Bitcoin in your 401k or your IRA or something like that. If that's what you want to do, fine. But it's a house of cards. It's a financial instrument, basically. This MSTR is borrowed money Bitcoin. That's what it is. Do you believe in Bitcoin with a term structure that is on borrowed money by MSTR? I mean, what you presume is that the halvening is going to make Bitcoin go up and save Michael Saylor and MicroStrategy. That's what you presume. But if it hits a certain point, he's going to get liquidated. And then 130 something thousand Bitcoin are going to be forced sold. Maybe, maybe not. We'll see what they do. But that is going to be a major catastrophe in the price of Bitcoin, regardless. Because you'll have to find buyers down the market. And or probably a bear market anyway. So if you really want to buy Bitcoin, don't FOMO. Just pay attention. Just pay attention to what all's out there. All right. So, yeah, you like that. He did one of your trades there. I mean, it was very, you know, what you want to see. Let's look at that. Let's look at that on Bitcoin. Because today's topic is just basically just Bitcoin. Because Bitcoin's boring, and I like to talk about things when they're boring. Most people that have big social media, YouTube channels, at least they used to, talk about things when they're ripping hot. And we're going to get to we're almost through the hour. Okay, we got to get through the watch list here because we got to talk about Netflix. So, very good price. Oh, man, just study this, guys. Study this price action, please. Please, if you want to, just ignore all the indicators that you've got on your chart right now. Study this price action right here. You come to a major high, anything, Bitcoin, whatever, stocks, oil, dollar, anything, holds it. This is a weekly chart, by the way, weekly, okay? And you have a big bullish candle to break above it. Oh, that's a breakout. There's no question. And I'll admit, I'm scared to take things like this because I'm a contrarian. I like pullbacks. That's just what I like. I wish I could be like Casey. I wish I could, jump into things when they've broken a high. But if something is going to go like in a big old trend, it's going to break that high and it's going to go with some strength. And so that's what you want to see. And it really gave you no question. So you wait a week, you let it pump and close that week, give it 7 days, don't FOMO, and you can capture a major trend. And so that's a good breakout. It's a damn good breakout. But what you don't want is you don't want a situation like this. These are weekly bars, by the way. These are not 1 minute charts. These are weekly of Bitcoin. You do not want to see this. Think about it. Traders, they're just not buying it. Like literally and figuratively. They're just not buying it. Now, there was still a little bit of hopium left, and you had another week that closed above the new all-time high that it made. But then you had that fail. Danger, 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 danger. So it's really important to study the breakouts to understand what is it going and what is not. And for the people that were sitting, we can't really emotionally get back into the headspace of what people were thinking at that moment. The idea that this would be over, because I've talked to a lot of crypto friends of mine in real life, and they all have kind of the same story. There's this property they wanted to buy, or there was this set amount that they had put in their head, like, I just need a few more months and then I'll sell. Like they didn't have quite enough. They were close. 100K was, within striking range at this rate. After all, it had dipped, and I held through that dip. I'm so smart. And you just couldn't tell people. But that December jobs report, that was it. And then once you broke that December jobs report, which told you that now Bitcoin was tied to interest rates, because why would the jobs report matter? It was sayonara. You have a double top. A little fake out there, but if you sold at 40K, despite what happened afterwards, you had your answer. So that's the history of Bitcoin and price action, and the rest is being written. All right, let's go through the comments, and then we're going to go through the watch list and talk about stuff. Hey, yeah, all right. Let me catch up. Can you okay, on Discord, GIG? I know that you got a couple. List them out for me again. Put them all together so I can so I don't have to scroll too much. Need to go through stuff. All right. Beginning of SoFi and PayPal. Are you bag holding? Be honest. So SoFi, I don't hate it. I don't hate it because it has come and held this 815, 50% retracement. That's a good level. That's good. I like this. I like SoFi. I like this a lot. You've had a pretty bad run here, but it has found some definite structure. This is why I do this, guys. I do this on Friday so that I can find out what I've missed and then come back hopefully next week and look for an opportunity. SoFi is an opportunity. It is. It's the same sort of opportunity that Rivian presented itself with, which I've been talking about the past couple of weeks, where things have been bad, and then you have some good, and then the good comes to a 50% retracement, and that's your opportunity. It's the same thing that happened with Tesla. Tesla was bad, and then it became good, and then it hit an opportunity, 50%. So I like it. I can't say that I don't. So yeah, SoFi, good, thank you. A note has been taken. PayPal, I'm probably gonna have. Let's see if it's doing anything like that. Nah, PayPal, I do not have the same opinion about. PayPal is one where it is an It is a cautionary tale in not bag holding. Every other week, sorry man, but I have someone ask me about PayPal, and it continues to be a lesson against bag holding. PayPal had an opportunity in the latter part of 2021 to hold its 50% retracement of the COVID low to the all-time high. It actually got below it, but we'll give it a little bit of leeway. But there was no reason for you to hold it once it really showed you it was breaking that level. And a lot of people are like, well, it's PayPal, I want to hold it. But you need to look at a PayPal chart next time that something breaks a 50% level to remind you of why you just get out. You can find reasons to stay in something. There's always going to be people publishing stuff, but it seems like every other, these are weekly chart. So for the last year, someone comes in the live stream and asks about PayPal, and I'm just like, I'm not bullish on it. It's not giving me any reason to be bullish. And if you had asked me last year, what is this, August? So August of 2022, when it had a little pump up here, like, should I hold on to it? Well, you're down 40%. If you asked me at the beginning of this year, of January, you're down 20%. It could turn around at any time, or it could turn around at no time. You're in what I call this zone right here, which is the valley, because it looks like a valley of risk. When something breaks its 50%, that is what it enters, the valley of risk. And you don't know when you're going to hit the bottom of that valley. You just don't. Nobody can tell you. I can't tell you. Anyone can, because you've lost the support. You've lost your reason for being into it, and now you're just holding on to something. So, all right. Let's see. PooPal. Yeah, that's a good word for it. Spotify. Spot. Is that what it is? Spot. Spotify, I'm going to use the same logic I use in anything. November to here, even though it came off of that, I would still want it to hit 126. We'll see if it breaks above this 50% from the leg down, but that's what I want to do there. Let's do some lightning stuff right here. All right. Yes, the spike indicator is on TradingView. I will send it to you. Send me a message on TradingView because I got to give you access to it, but I give it for free because it's very useful. All right, let's see. KHC, that is familiar. Kraft Heinz, okay. It looks like it's coming to, there's my retracement level telling me, okay, here's another thing. So, yep, 32.46, already got the line up there. It's holding at 50%. It's consolidating, but you're at the bottom of that range. If I was a ratings agency, I'd give it a buy. I would. I say it that way because I really oftentimes want to take the first test of the 50%, which it didn't really give, because I really want to catch that and then onward. That's the kind of trend retracement I want to catch. But if I was a rating agency and people were going to pay me a salary to give my opinion, regardless if I'm right or not, I would give KHC a buy rating, which is really the opposite of what ratings agencies do, because they would give you a buy rating on Netflix, where I got my N's crossed. They would give you a buy rating, I'm sure they have, on NVIDIA. I think Kramer's probably bullish on it too now. But I really want to talk about NVIDIA here because I've been watching this like a hawk since earnings 3 weeks ago. Because again, just as we talked about with Bitcoin, what did you have? You had an all-time high that breached and then closed back below. Deadly. Deadly, deadly, deadly for something especially as bullish as this. But I'm not just going to short it based on that. I'm glad I didn't too, because right now you had a week that closed above it, and now what's it done? Let's dig down to the daily. this little trend right here, it's holding 452.89. So Thursday and Friday today, it came down and held that level. Look at that. It's just like that Bitcoin I started the live stream with. It's just like that, where you look at the 50% and how well price respect. I mean, come on, guys. I mean, seriously. If you're a day trader, draw the 50% and then look for setups using any other indicator at that level. Just do it. Just Shia LaBeouf, do it. It's there. It's not hard. You basically just go in TradingView and you take your Fibonacci tool and you take out all these other lines that are just going to confuse you, and you just look for 50% retracements and look and see how often things just kind of hold at that level. Does it happen all the time? No. Does it happen perfectly? No. But does it create great trading opportunities? Yes. Yes. And that brings me to Netflix. Netflix, which I've been talking about, and this was actually something a person in the live stream reminded me of a few weeks ago. Netflix, let me put on the spike there. Netflix had a bear trend from November 21 down to May of 2022, came up to this big 50% retracement, and that's where it's at. It did a spike. It did a false breakout in July, and it has now come back up to the Tinkinson, the red line there, which is basically just a shortcut for the lower term 50% retracement at 442.33. I'm short. This was one that I put on this week. Let me dig into this a little bit further, because I put this on Tuesday just because I wanted to be short. It's a long-term play, so I took risk in accordance with that. Here, let me just take this off because it's going to get confusing. But let me show you how I could have done it even better. So again, let me clean up my chart. I like nice, clean charts. Go away. Okay. So just the 50% weekly chart. I know I want to be short, and I know I want to be short for a long time, well into 2024. If you're looking at options, this is not a weekly option play. This would be going out into at least March of 2024. If you don't have that kind of money, get you a margin account, short a share if you want to play it. Otherwise, I know it can be kind of hard, but hashtag this is not financial advice. Don't short just because it said to. The spike happened, and so I know thematically I want to be short Netflix. It's a setup. It's a trading setup, a broad one. How do I execute this? Well, here's one way that you could try to start the trade. So if we go to the 1 minute, hold on, let me come to this. It was basically Tuesday of this week, which was the 5th. Yeah, it was this big bullish day right here. All right. So we punch up, and then we open the morning. This is Tuesday. Tuesday, the 5th, had a spike down, and launch up. Okay. I put on my short right about here, and I walked away, because I'm giving it a stop well above that July high. So, but look what it did around 11:22. Now this chart is a little less clear on. I don't have my Thinkorswim up right now, but TradingView unfortunately gets a little jumpy as you get further out of live data, unfortunately. But this was a little bit more clear. But basically, what you had was a small 1 minute spike using that spike indicator, which is very simple. You can see this for yourself. At 11:20, it poked above this prior high of 1052. And then this 1121 bar closed back inside this range, back inside the red line, with a pretty high significance of the ATR, the average true range, 145%. If you wanted to take a small trade, if you wanted to do something dumb, which is play a 0 or a 1 or a 2 or a 3 day to expiration option, you could play the 1 minute from 452.77. You could look at it from this range right here, give yourself a 3-to-1 down to the 449, and you could pull some initial profit, a few $100, to maybe buy yourself a longer term option This is still within that same intraday, by the way. And roll those profits into a bigger option. That is one way that you could have done it. Or you could have taken a short share up there, and basically what you could have done was given yourself a trade like such where, let's say you have $400 of margin, whatever the margin requirements would be, short 2 shares, take profit of the 3-to-1 there, and give yourself just about $1 from 452 to 453 of risk off that spike. And that stop that you set on that day, Tuesday of this week, has never been triggered. As I said, I was not this crafty. I kind of put on the short long term and didn't really watch it. But I noted it because I want to be more diligent to catch things like this so I can use them as telling examples. But this would be how you would take a very, very low risk trade on a 1 minute that has the potential to become a weekly trade. So that's Netflix. But Netflix, short is on. Nvidia, the short is pending. We'll see what happens next week. And if you're really bearish on the market, which I'm not, I find it better to just not be bearish, not be buying SPY puts every week because you think you know better than the market. Look for opportunities in individual stocks. Like if you're really bearish, don't buy SPY puts and call yourself a genius. Look for things like this, like Nvidia going on a big bull run, that a bubble that has a potential, not saying it's going to, but has a potential to pop. And when bubbles pop, they give great rewards to the people on the short side. Or Netflix, which has come up to a major level and is holding that level and giving you a sign to enter short. That's how you short the market. You look for short opportunities. All right, let's go back to the list, and I'll start to wrap things up. If you got things to look at, post them in the chat. All right, AMD. AMD is one that I already have marked up from probably people looking at. It is not being a well-behaved stock. What it did was it closed above the 50%, gave it a little bit of a try, and it has now failed to come back and hold it as resistance. And I've been saying this probably for the last couple of weeks because, you know, if we talked about last week. You closed below here, came up, closed to hold it last week when we talked about it, and then again, you tried to get above it and you held it. This thing is in a very precarious spot. It is telling you that 109.51 is a level. It is. It held it here. The bar, these are weekly bars, by the way. The closing above it, closing below it. That's your level. And if you take out this low from August, that's sayonara. I mean, you just have to presume that level has been held as resistance, and that's holding. If you can get back above it, it's wonky, but that level is clear. The level you should have on your chart is 109.51. It's telling you by the 50% retracement and the bar is closing to hold it, that is the level. That is the defining level. And right now it's below it. So risky. All right. MDLZ, Mondelez. I would set an alert at 66.66. Ooh, it's not quite dangerous because it's got an extra 6, but there's your 50% from this recent trend that came back from September. Is that another example of 50% is working? Look at that. This looks a lot like Caterpillar, which, you know, lock this in your brain, kind of a meandering trend, pulls back, holds 50% in September, does a second leg. Okay, hold on. Caveat. That 50% is a little in the weeds, but you do have it at the past all-time high. It's really, really good. It's really perfect, and all I ask for is perfection when you have the 50% line up with a level like that, but you definitely need to hold this all-time high at 69.47, because even though this is the next 50% level that it could come down and hold, it could still hold here to go up. So you're at a level right now. So those are your two levels, 69.47 and 66.66. This looks a lot like Caterpillar, which I'm still hodling, which again is same thing. COVID low, all-time high, pull back to 50%, leg up, pulls back down into the weeds. So it can happen. It can, in fact, hold that 50% inside the past gobbledygook and then come back up for your next leg. So, and that's why I prefer to wait for it to come back down into that 50% level, even if it is coming down to the all-time high. So entirely possible. And if I was going to take a long, I would wait a little bit more until 66.66. 66.66. Yes. All right. C3 AI. This was another really interesting 50%er early in the year when I charted it. And you see I already have the lines on here. So really good example of 50% holds coming up to the high and then not really following through. And then you have this mess right here. So let's look at it again now from that perspective, the broader term. Let's go up to the weekly to clean it up a little bit. No, daily's fine. So from the low up to here, it had its chance to hold this next leg, and now you got, earnings did this? Okay, well, earnings didn't do it any favors. And now what you might see is it come up, and then what you want to see is what does it do when it gets to this 29.53? Can you get it to close above it a few days? If you do, you may be in good shape. If you do, then what you may want to even do is see if, look, pre-earning spike. Man, look at that. So on the day before earnings, it did a bearish spike. Let's dig into that a little bit. Was that a 30-minute spike as well? Yeah, it was. It was. It's 2 hour, but it basically, you come to this level. I would not have taken this trade because the profit target would have been below this low, but interesting that sets up that way. So yeah, basically watch 29.53. You need to get back above it for this thing to be bullish. Otherwise, AI is not a fad, but man, this company I think just benefited a lot in principle from having AI as its ticker in the current year where it is a fad. I haven't looked in their fundamentals, so I don't really know. Kroger had earnings today. Kroger is relatively unchanged from its 50% that it touched and held in October of 2022. Home Depot is another good example. This is one I posted on TradingView back in their earnings cycle. It's one of these kind of lingering holds of the 50% on the weekly, but so far so good. All right. Let's go back through the rest of them. I think GIG had, when we looked at spot, all right, I think we're coming up to it. What else do we need to talk about this week? Let's go through Casey's trades. I owe him that much. All right, which ones I like? Oh, and there's one up here, RELY. Realty Global. It's going up. And I would, the level you want to look at, pullback, 16.23. But it's going up, you say. Yeah. You want to watch out when it hits 30.15. Let's see. Aries. One of Casey's breakout trades. Looks like it is breaking this little consolidation. You've got a nice big bullish bar to break it up. Good stuff. I also like the fact that it came down to hold a little temporary 50% right there. LLY, Eli Lilly and Company. Up it goes. Same thing. Oh, GSK, yeah. I mean, I know I have some in the portfolio somewhere, and I'm glad I do. Yay. I mean, this is one where it really doesn't give you any kind of opportunity for a pullback, does it? Who knew that drugs sell themselves? GlaxoSmithKline? Are we going to see pretty much the same thing? No. Well, we know who's making the better drugs. You can see that this recent 50% has basically been holding as resistance. And so the level to beat on GSK is 37.72. That's the one to look for. That's on the weekly. On the monthly, yeah, and that's the level. That's the level of that big down move. So you got to conquer that. You got to get a good solid close. But man, look, things like this, I mean, they tell you where that level is. You need to get above there and hold. Do not do that. That would be bad. But 37.72 is where you need to have your alert. You need to look at SPY. Yeah, you know what? Let me finish Casey's and then I'll circle back on SPY and gold and everything like that. Marathon MPC. Boop. Pumped up above. By the way, when we're talking about breakouts, one to look for, man, everybody is freaking bearish on Disney, and they all have different reasons. You know, some ranging from, you know, fundamental to political. But everyone is just really wanting to short Disney at a major low. Like, slow your roll. Hold on. Let's get some confirmation of breaking this low first. Like, it's getting my contrarian spidey senses tingling when a lot of people are telling me I want to short Disney when it's at a major low, the COVID low. I mean, bring up a chart. Like what's here? There's the COVID low. We don't remember COVID. Remember it was bad for everything, all stocks. And yes, Disney has been down to this level. It's a major level, guys. Like let's what are we really trying to do here? Like what's our risk reward? You know, if you bet on something going down, you need to have a target at the next reasonable level. That's just smart. And your next level is 79.07. And Disney is at 81.58. So you're trying to make $2 down to the low. Oh, you think it's going to break it? Okay, well, let's be good traders and let's wait for some confirmation. Let's wait for it to possibly close. Do what we talked about earlier in the live stream, where you look for that big red bar to close below it, and then we'll start shorting it down to wherever you want to short it to. But let's be careful shorting Disney. I know it's been very popular this week. I've heard it a lot of times, and it's making me want to long it just based on how many people have said that. PSX. You're looking to long entry 124. Okay, so breaking it. Okay. It's getting up to this major high. Yeah, this kind of, we need to look at oil then. I think, you know, oil has been one, oil's bullish, by the way, and oil is another one of these cases where it came down to a 50% retracement. Now, we got to hack this a little bit. We have to assume that the bottom was actually zero instead of below zero because, you know, how could you be paid to get oil? Well, that was something that happened in April of 2020. But from zero to the high that it made in March of 2022, the 50% retracement on oil futures was 64.98. Remind me, what is the what's the oil ETF? What's the oil ETF? That's not ESO. USO was one of them. Does it have? There's another one that people usually bring in here. Do you remember what that is? Anyway, futures are good enough to know. So oil go up. So PSX breaking the high. I like it for the underlying commodity. Marathon Petrochemical MPC. Definitely. My pick and hodl since 2021 has been ExxonMobil. Not as good as MPC, but it's still up there. So let's see. PBF. Peanut butter and jelly. Peanut butter F. PBF Energy. Another energy stock. Okay. Is this oil or is this utility? A lot of oil stuff is at a high. That's interesting. A lot of oil companies are at a high, and I think that oil is trending bullish. Now, again, when we take a 50%, we're going to presume that it's going to come up and retest the high, if not break it. And so if we think oil is going to go up, then we probably need to buy electric vehicles and be looking or look for a way to make money and what we're going to be paying at the pump. Rather than complain about it, let's buy stock in companies that produce it. Man, that was a great trade, ExxonMobil. ExxonMobil was one of those trades where I gaslighted myself. I bought it. I thought I was too late to buy it. I thought I was too late to buy it at $47.50 here back in early 2021 when everything was bullish and you didn't know what to buy. Everyone assumed that dirty energy was going out. Like we were going to be forced to destroy our gas cars and buy electric next year, right? Wow. The narrative was so one-sided that oil was something you completely needed to divest from. Just go back in time, educate yourself on history. Like I said, I'm a curse of a bad memory. I remember all these market narratives and how ridiculous and how opposite the future became from these narratives. Go back to what people were saying. Even Ray Dalio, was the big famed investor, was all telling people to divest from oil and dirty energy. I mean, like, everyone was against buying oil stocks in early 2021. You go back and hold on. I'm agitated because it's so important that people understand this kind of stuff. So, what am I searching for? Divest oil stocks. This is when ESG was at its basic peak. Back when 0% interest rates meant that you could have such qualifications. I think the S&P, the Standard & Poor rating agency, took that off of their qualifications for things. I'm going to have a hard time quantifying this, but just understand that when everyone is saying that you need to sell something and you don't need to buy something, just don't automatically run out and buy it, but keep that in mind. All right, let's start wrapping things up here. All right, that was all of them. So B&O, thank you. So B&O is the better, thank you, Jen, is the better oil fund to look at, and it is likewise. There's a better one actually. There's a more clear one that actually did come to 50%. So I'm going to stick with it on that. All right, lightning round. Since you asked about SPY, I talked about it in the very beginning, but that's important. SPY has done a stair step. 1 second. I think I need to sneeze. I'm good. Let's do it. So from the COVID low to the all-time high, we pulled back to the 50% retracement. It's magic. It's magic. Then from the October to here, we pulled back and launched from the 50% retracement. Then from the leg up here, we pulled back. ES futures were a little more clear from here, by the way, from the low in May to there. Okay. But since people like SPY, they like to invest in, I use the ES futures because they do tend to be, I trade them on a daily basis. I look at the 1 minute all the way up, and they trade 22 hours a day. So they're more days a week. So I like to use ES. But essentially it held, and the defining level for recent price action is going to be, notice the spike we had that signaled the down move. The defining price action is going to be from the August 18th low to the high that we made on September 1st, and 443. We pulled back down to this 50% retracement level, and we've held it. We held it on Thursday when we hit it, and then Friday it turned from that. So what we need to presume, because stocks only go up, remember, is that we are going to come up to the high, we're going to come up to breach this high, and we must presume that we are on a trajectory to retest the all-time high. We're not far. It's within striking distance this year. From a technical standpoint, that's what you have to assume. You can read oodles of information about how it's all bogus and stock market going to crash. But from a technical perspective, stock market bullish. We're going to retest the all-time high. We'll probably break it this year or next. I can dazzle you with scary stories about inflation and the Fed losing control, but I'm not gonna, because plenty of people are doing that. I'm going to tell you what most people don't want to hear, which is we're in a bull market. I mean, we had a jobs report last week. Which everyone was looking at. That was it Tuesday? No, hold on. When was that jobs report? Was it Friday of last week? What was it? I think it was Friday, August the 23rd. Either way, we had what was the non-farm payrolls? One second. Calendar. Economic calendar. Give me the week before. Was non-farm payrolls last Friday? It was. So Friday, September 1st. Yeah. So it closed down, but it opened higher. And if we look on ES, because there's another reason I like to use ES, because you can see the aftermarket action. So non-farm payrolls was September 1st, 8:30. Market went up on bad job numbers. What kind of market responds positively to bad news? A bull market. What kind of market responds negatively to good news? A bear market. Bitcoin had its good news, the ETF, and it couldn't really sustain it. What kind of market is that? Yeah, it's kind of in the middle. All right, moving on. TLT. Double bottom, I hope, because this was my trade of the year. Hey, guess what? I'm not always right. Good thing is I don't have to be. A little bit of humility there, but we'll see. Stop is breaking the low of 91.85. We'll see. Gold, still short gold. It's slow, but it did a false breakout in May of this year, and I'm going to assume that gold is going to come down. I'm trading gold down to 1850. Man, I've really noticed the Peter Schiff appearances. If you don't know who Peter Schiff is a financial personality who predicted 2008 correctly, mainly because he's just always bearish. And he's always bearish because he's selling people fear so that they'll buy gold from his gold selling company. So anytime you see this guy, let me bring him up. I mean, I've got a real soft spot for him because, he's a cool person to listen to, and he's incredibly consistent. It's this guy. Anytime you say this guy's face, just assume he's trying to sell you gold from him. That's his business. Got to respect the hustle. But anytime you see something, it's going to be the Fed. Oh, look at this. The Fed will seize all your money in this crisis. Okay, so what's your solution, Peter Schiff? Well, buy gold. Well, how did owning gold work out the last time the Fed started seizing stuff? Oh, that's right. The United States government seized people's gold. Anyway. Buy my gold. I'm short gold. Dollar has held its 50% level at 102. Gave a little bit of a fake out in July, but up it goes. Dollar is going up in value for this week. I was reading the Twitter thread, Bitcoin hodler talking about how the dollar is about to turn over. The dollar's topped out. I don't see it. I don't see it on the chart. Amazon, trade of the year. So Amazon is the trade of the year. It's the trade of the decade. It's the trade of the century so far, in that from the October 2001 low to the all-time high from 2021, it pulled back all the way 50% to 94.46. Loose, but held it. Great buy earlier this year. And now if we translate that into modern times, from the high down to the low, The 50% that it needed to conquer was 135.04. Notice the bar is closed to hold it. Acknowledge it as resistance. Came back down to the Tinkinson. Held it this week. Came down. That little wick right there. Tried to test it again and has held it. There you go. This would qualify for conquering the resistance. Remember, you're coming off the support here. This is resistance that hit, breached it, came down, held it as support. This is ready to retest the high. Amazon. Activision Blizzard, and we just hodl until they finally close that thing. Caterpillar, we talked about. MetLife, again, 50% retracement going up to the high. NCLH, this is one that, I need to revisit this because I still have some runners on here. What NCLH did early this week on Tuesday was a spike, and it came down, and it's been holding this level. If I were looking for a long, let me clean this up a little bit. That 2-hour spike basically is going to define my remaining shares that I still have long in NCLH. So if we break that low at 1582, Home Depot's long. Truist Financial is my pick for a dividend stock dividend bank play. And people have been coming up with all kinds of different numbers within $10 of the current price for Tesla, but I'm still waiting for Tesla 200. Call me overly patient. I don't care. All right. Last check for the comments. Hello. Curious your thoughts on wheat, WEAT, as a stagflation hedge. Well, I don't presume we're in stagflation. It's low. It's cheap. I would need to see a setup. I don't know enough about commodities, and this is another example of what I talked about earlier, where you have a 50% level. Bear in mind, this big rise up here was based upon Russia invading Ukraine, Ukraine being a very big producer of wheat. And so a lot of people bought this assuming that it was going to be, very bullish. There was going to be a shortage of wheat. That thesis didn't really play out. And so really there was no reason to hold on to wheat once it broke back in December of 2022. And so I would look at this like any other instrument, where if you're long, you're basically bag holding, and you're in that valley of risk where you don't know where it's going to turn around between here and the bottom that was put in 2020. I don't see a long here. You're throwing dice, you're catching a falling knife at this point. And the thing that I brought up earlier, look at this chart and look at a chart like PayPal. I mean, once you give up that resistance, it can just keep on floundering, and you can be left holding a bag. You want to see something like Rivian, where it flounders. You get that first leg up, that bullishness, where you're patient and you try to capture a 50% retracement from that push up. That's what you want to see. So wheat, you need to see some kind of a bullish move in it, and then you can start to play it. So I have a feeling that bonds and commodities are going to become the new hot trend as we continue to decouple from China. I mean, I think bonds, once interest rates start to level out and the Fed gets close to pivoting, then all of these bonds that have been issued at high interest rates are going to become much more valuable. So the prices of bonds are going to go up. That's what I'm looking for in TLT. But we're just going to have to see how that plays out. All right. Thank you guys for joining me this Friday. I hope you had a good time on this extra long session. I do this every Friday. Hope you'll join me. I think the notes that we need to take this week is we need to look at SoFi come Monday. And links are below: Discord, TradingView, and YouTube. Come join the discussion and share ideas. So thank you guys. Have a great weekend. Trade wisely.